Hi guys, it's Ruth here for Property Sisters. We've got the lovely Michelle Dean at Peritus Corporate Finance, and today we're going to be looking at certain sectors of the commercial lending arena, and Michelle is going to tell us what's going on with specific areas. So lovely to see you, Michelle. Over to you.
Thanks, Ruth. Yeah, it's been a testing January. I thought it may have been a slightly easier start to the year, but no, it started as the year ended, really, and it has been interesting in that it's been noticeable that commercial conversions, where you want to convert, say, an old shop at the bottom that's already got residential above, and you want to convert it maybe to completely residential. Lenders are just becoming a little bit cautious of that at the moment, and so loan to values where they would have been, say, 70% of purchase and all build costs, they're coming down to like 65, maybe.
Why is that? Why is that?
I can't get to the bottom of that at the moment. It's been a gradual change. I mean, I know that loan to values in general have reduced, and that's just, we have to accept that. But I don't quite get why putting more residential stock into the market is causing this issue. The commercial to residential has been around for ages. And these smaller ones, whether or not they don't want them taken, a lot of the smaller ones are high street. And a lot of lenders don't like there to be a residential block in the middle of, say, a parade of commercial shops like fast food and the usual things that you get in a parade of shops. So there's a lot of lenders that will not particularly want to do that, and I can kind of get that. It's not, people, it doesn't open up to as many people that want to purchase.
And this came about in the latest changes, didn't it? This came about in the latest government changes. So being able to do this is relatively new in terms of commercial to residential, the small shop in the middle. So maybe they're looking at a few years before they
Exactly. And I think that lenders are just being very cautious across the board. I'm picking on semi-commercial properties in parades, the smaller size, but it's very noticeable across the board that lenders are more cautious. Valuers are being slightly cautious, not as bad as I thought they would be, but they are still being cautious. And the heady days of high loan to values are behind us currently. But that's not to say that when we come to the new normal, that things won't get back to where they were, that we are back at like 70% of GDV, 90% of costs, and we've got more lenders in the market. But I seem to be finding that the type of lenders that we need to go to for the smaller end of the market, say below 500,000, and then even to when you get to below 100,000, those lenders are very expensive. They get the job done, which is, at the end of the day, you're not going to make any profit if the building doesn't get converted or you don't build it out. However, I'm just finding that there is a gap in the market slightly for funding under 500,000, and it's expensive. Just finding it's really expensive at the moment.
So that's a big watch out for all developers at the moment, is those additional costs in the smaller developments. And the other area was leisure you wanted to talk about as well. What's happening there?
I mean, leisure is a dirty word at the moment. It really is. It's lenders don't want to go there at all. Any kind of hotel, forget it. So I do appreciate that. There may not be that many people looking at that type of asset at the moment, but anything to do with leisure is just
out the door.
It's so difficult. And I'd say to you, if you can, just avoid it for now, and just look at some other type of main commercial asset if you're looking to do something.
Yeah, that's really good advice. And then on to buy-to-lets.
Yeah. So as a company, we have a lot of relationships with a number of lenders, and we are able to get debt service cover at 100%. Whereby there's a lot of lenders out there that want 120, 130, even 150%, which just scuppers the deal in a lot of cases. So having it at 100% does make it a lot easier. It means you can raise more, and you can move on quickly. So it's just something to bear in mind, that if you are looking to portfolio buy-to-lets or more than 2 or 3, then we'd happily look at that for you.
Yeah, good news. And for anyone listening, Michelle is talking about 150%. She's talking about the income on those properties, aren't you, Michelle?
Yes, I am.
Good.
Yeah,
yes.
yeah.
Good. So, just in case anyone doesn't notice, because we do like to shorten what we're talking about, but I just want to make sure everyone understands what we're talking about.
Yeah, sorry about that.
So I think that's it. I think we're out of time. Is there anything else that you wanted to talk to us about? I mean, you're going to be back in a couple of months anyway, and no doubt the landscape will have changed again. So,
well, I'm really hoping so. I'm hoping that things will have improved by then. And to be honest with you, if things improve in the meantime, then I might just do a quick ad hoc one to update people if things change, because I'm hoping that as we start to lift restrictions and start to come out the other side, that things will ease up and we'll be in a situation where I can really bring some positive news to this.
I would say one thing with commercial is that everyone's talking about residential because we've got that stamp duty.
Yes, yeah.
You know, even I'm looking at, normally I would just look at commercial, but I'm looking at residential, you know, to purchase. So that's putting me off the commercial market. And I don't know if that's happening with a lot of investors as well. They're kind of scrabbling around to see what they can buy. So there's less activity going on. I'm just not sure.
There might be less activity going on, but it also means you might be able to pick up a bargain, because people would take their eye off the ball on commercial.
Good point.
The other thing that I would just point out on residential is that we have a lot of lenders that update us and say we aren't taking any more applications to guarantee completion by 31st of March. So if you are still thinking of doing that, and you want to get in before that date, you really need to hurry up, and you also need to speak to your broker and make sure that who you're going with guarantees it by that date.
There is one caveat, and then next Monday they are debating stamp duty to see whether they're going to extend it. We know that Rishi Sunak is not keen about extensions, so I think I mean, personally, if I'm a betting woman, I would say it won't get an extension, but you know, let's watch and see.
Let's keep our fingers crossed that they do.
Don't bank on it. Don't bank on it. That's all I'm saying.
No, not at all.
God's sake, don't bank on it.
You need to be working towards the 31st of March, and if it's extended, then that's good news.
That's a bonus,
Absolutely.
Well, thanks ever so much, Michelle. Loads and loads of fantastic tips and content there. And we'll see you again soon.
Absolutely. Thanks, Ruth.
Bye.
Bye.